Hi, this is Ron Janish, and normally I teach the Andrews and Babson's techniques. And in this particular video, I'm going to address the concept of, is there danger of a massive drop in the stock market? Now, realizing that if something like that occurred, it would be triggered by some type of an event, maybe another 9/11 or whatever. But let's take a look at it from a technical point of view, because had we looked at the market back prior to 9/11, we could have seen exactly where the market was most likely to bounce when it dropped right after the market was reopened at 9/11. This is all using Babson action reaction lines. So here we're going to look at some Andrews concepts, very simple, and some other concepts. This here is a Dow Jones chart. And as you can clearly see, this is each of these segments like this are a year. So we're here in the September of 2014. And what we have is we have the ability to draw a line that connects many of the lows along the way. Now, those of you that know zip about technical analysis understand this, that there are many people out there who are market technicians who believe that once prices drop past this type of a line and close past it and stay closed past it, that they will continue to the downside. And the more bounces you had along the way here, the more worrisome this kind of thing gets. Okay, so that's number one. Now, number two is something called a megaphone. Now, the megaphone is a concept that you can read about in a book that was written over 100 years ago. And quite frankly, if you look at the megaphone simply says you have lows that if you draw the line it goes down, and then you have the highs and it goes up. See, that's all it is. And so some people call this a reverse point wave. Whatever you call it, this concept was true starting over here. Okay, so for the last year and a half, you've had a megaphone pattern. Okay, and fact of the matter is that you can find megaphone patterns all over the place in the market, and sometimes they work and sometimes they don't. I've done a lot of research on this type of thing, and I found that there's certain things that will help you to know whether they'll work or whether they won't. Right now, the high in this area here is in the range of a critical reversal area. So over here it wasn't, even though over here you had the megaphone pattern. Over here it wasn't, but over here it is. So could it go higher? Of course. Then again, could it go lower? Of course. So in a moment, I'll show you what to look for as time goes on here. So, or what I'm looking at, okay? So we have this megaphone pattern here. And what does a megaphone mean? Well, generally what it means is that if there is a down move, it'll try to hit this line down here, which would be a huge haircut on the Dow, and it would probably mean that a whole bunch of businesses went out of business. Now, you might say, hey, show me some proof that this stuff actually works. Well, let's take a look back in 2007. Okay, and let's see if there was a megaphone pattern at the high in 2007. And lo and behold, surprise, there was. So here's your megaphone. Okay, your lower pivots and your higher pivots. There's your megaphone. And because normally a correction pattern is one of these ABC type things, or ABCDE. Okay, so here's your megaphone, and this is what we saw at the high in 2007. Does that mean a crash is imminent? Not really. So we know we have a megaphone pattern. We know we have one of those multiple pivot lines that if prices break, there's danger of the move continuing to the downside. Okay, so what else do we have? Well, I'm going to show you what we use. that's available to the public for your perusal, and that is this one here, if we can bring it up. There we go. Okay, so what we have is this particular thing here. Now you can find this on a website called andrewspitchfork.com, and you'll find this chart when we update it. And we only update it when we think it's worthy of being updated. In other words, if there's no value, no number to put here, then we won't update it. For example, today we will probably have a 1 over here, and so we will update the chart at the end of the day. Simple as that. Now, what does this thing do and how does it work? And well, how it works is for example, if you look on CNN, you would find that when prices were in this area here, I was forecasting not only an up move, but an up move to new highs, and lo and behold, that's what happened. And as prices came over here and we started getting numbers above the market here, I forecasted that the market is due for a down move. Exactly how much? Wait and see. Wait and see how do we wait and see? Well, one of the things I look for when I wait and see is I look to see if I have any other of these numbers here. If the numbers are above, then that's usually a downward pressure indication. If the numbers are below, like here, usually an upward pressure indication. Okay? And right now, there's this little red line here. This red line is known as the median line. Okay? And if prices go down and break this median line and close beyond it, there's a pretty good chance that they'll have broken the multiple pivot line. Let's see if I can bring that up here somehow. Let me show you what I mean. There we go. Let's forget about that. Okay, let's take this off. As you can see, I do this on the fly. And we simply draw a line that connects all these cutesy poo little pivots. See how many? There were lots and lots of pivots along the way here. It kind of went reversed when they hit near the line. Okay, so the idea is that we have to watch for prices to break this line and to stay below this line. If prices can break and stay below this line, then there is cause for concern. Now, what also can you watch for? Well, it's pretty easy. You can watch for prices plunging through this red line here. Okay, so a plunge through this red line would also be an indication that they're probably going to break that other uptrending line, that all-important line. Okay, so this is what we're looking at the present time. So what else am I watching? Well, I'm using the Andrews and Babson indicators right out of the textbook. And in addition to that, I'm also watching for what the values are on a daily basis here in the new Andrews Pitchfork indicator. So that's what I'm doing. That's the long and short of it. And now you know whether or not there's a good chance of there being a horrendous market crash. And you also know what you might look for that might forecast if some kind of significant event is going to happen. All right. So I thank you for your time. Get a chance, go to andrewscourse.com. Take the course. We're presently it's the beginning of the month, but I will tell you that we only have one opening left for this month, and we'll have more openings for next month. So please do get the last one because they're going to be gone. I thank you very much. Bye-bye.